See that right away. Awesome. Just making sure that works. So thank you all for coming in. Just making sure all this is working. Looks to be okay. So yeah, so thanks everyone for coming. If anyone stumbles upon this later or is new here, essentially what I do is once a week I come on live stream and I show off basically what exists in kind of the back end of Stats Edge Pro, which is a blog post each night about, what I think about the market, what I'm feeling about everything that's going on, all of that kind of stuff. And just making sure things are working here. So what we're going to do today, kind of like I do every night, except you guys don't need to watch me for an hour, hour and a half. I just kind of do it and upload a blog post. So we're going to go over the crypto markets, the stock markets, Forex. I'm going to look at the current list that I have going right now of stocks that I'm looking at. We'll cut out anything that I think is no longer valid, and then we'll build a new list. And then when I'm done here, I'll take all of that data that I've gathered and we'll do the Stats Edge Pro stuff. So for any pro members that are hanging out here, it's just I got to put the stuff together after the stream's done, but I'm kind of collecting most of the data as things go on. So there we go. So just sign in and stuff. So again, if anyone's interested in the tools that you're going to see me use, or are just interested in kind of the pro area where you got access to my scans and Discord chat room, and then basically what I'm looking at each day for the market. Links in the description below for all that. Just the links for the programs, just FYI, I like to be upfront about all that. Those are affiliate links. So if you're interested in trade ideas or TrendSpider or TraderSync, they will give a commission back to me. So for those who don't know, Trade Ideas is having a test drive right now. So if you click on the link description below and you go to their website, they're doing, it's like $11 for 2 weeks starting Monday. So if you sign up now, you'll have access well before then. And basically what that is just access to the full program. So you can kind of walk through it and see if this is something that is interesting to you or makes sense to you at all as a program. You can play around with it for no commitment for $11, and then if you like it, there'll be a deal sent to you at the end of that. And if you're not, then no harm, no foul kind of thing. So, with all of that out of the way, let's just get into it, right? Just making sure all this is set up, and then if I hit that button, perfect, we're good to go. Okay, so let's start just by going into, did I do any of those short videos this week? No, I don't think I did. I'm getting away from those more and more longer form content. So let's just get into crypto. What we're thinking going on here. You always have to start that with the coin, the OG. So, full disclosure, right? I am long some Bitcoin around, I think it's like 41 and change. Basically, these blue lines here that I've had on Bitcoin, I've had these drawn, people will tell you, for like a year now. And it's been respecting this trading really well. So when we broke down out of it, I took a short in through there. It put in this little bear flag. So I actually took another short in through there, and that was quickly stopped out on that one. So when we reclaimed this 41,000, this level right here, I got back involved there. Stop is going to be under that if it's wrong. So if we roll back over, I'll be wrong on this one. I may flip to short. I don't know. I'm just playing off these levels. The way I look at it is being able to get right at this 41,000. If we go to retest that, then that's a great gain. And again, my risk is small. And anyone who knows anything about me when it comes to trading, the whole idea is, right, lose small, win big. Don't worry about your win rate. Control your risk, and then everything will work itself out over time. On top of all the analysis I'm going to do, forgot to say, I will do stock requests. So if you have any of those, certainly, things you want me to look at when we get near the end, I will ask for those, so get those ready. And, let's chat as it goes, right? Use the chat room. I have the Discord open on my other screen here somewhere. There it is. So yeah, feel free to ask questions as it goes, and keep this conversational, because I think that's the reason I do this, right? All right, so just writing little notes here, because again, what the blog post that I do at the end of each day is me going through these charts, writing a little note on each individual chart, and then uploading that so people can scroll through and then see what I think of each sector, each stock, all of this. And then I do a little post in the bottom, couple sentences, maybe a paragraph of kind of tying it all together. But each individual chart is what I look at. What I have noticed recently, even with Bitcoin not doing a whole lot, is there has been a lot of these individual names, like smaller cap coins that have just been popping. Some are 20, 30, 50%. So it makes me think that this is probably the area to continue to watch within Bitcoin. Bitcoin in and of itself, and this is just kind of more of a commentary on everything, I think like all the Bitcoin maximalists were all excited when you got institutional ownership in Bitcoin, saying, okay, well, now it's legitimate, so now it's going to go to 100,000 or a million or whatever. Now that the big guys are involved, my thinking is it's almost the other way. It's easy for an individual who owns 10 grand in Bitcoin to, when the market gets cut in half against them, to go, okay, I can just hold this. When it's institutions, they really can't. So they're going to do a lot more trading. And I think it's more impactful, actually, if you think about it the other way. It's quite easy for someone who bought $10,000 worth of Bitcoin to have that triple and go, okay, well, now I have 30,000, but that's still not, I'm in this to become a crypto millionaire, so I'm going to continue to hold. If a hedge fund makes 300% on one asset, they will be selling that asset to lock in gains against and to make other trades and to go to other assets. So what I think that just means over time is that the more institutional ownership you get in anything and the more institutional involvement, the less volatile it will be on both the upside and the downside. So long story short, I just think it's the end of Bitcoin going up 10,000%, right? I think those days are over. So if you're looking for those explosive growths, I just think you have to then go into the smaller coins, right? And I've been saying for ages that I think it's important to, everybody should open a crypto account and just start trading it, even if it's not, I'm going to take this one too. Right, even if it's not something that you're going to go into big, I think learning to trade 24-hour markets and things like that will be important, as even the equity markets are going to get more in that direction. This Cardano, I'm in this one as well from, basically I think right where it is. I'm probably even down a little bit on this one, but just playing off this $1 level. As long as we hold $1, I'm going to be involved. Under $1, I'll cut it quick, and then if we get back over $1, I'll get back in, right? Because again, my entire philosophy is that I don't care about win rate. That's like my shtick. I just don't care about win rate at all. For me, what matters is just at the end of the day is how much money I put in my pocket. So I think that can be achieved easier than by focusing on win rate, just by focusing on risk reward and playing simple things like this, like Cardano above $1, I'm in, under $1, I'm out. So if I get out and I take a 4 or 5 cent hit 10 times, that's fine. So say I take a 5 cent hit 10 times. And then once I get in it and this thing goes back to highs, which is like what, $3. So I lose 50 cents and then I make the other side, right? So risk reward ratio is more important. 100%. I would even go further and say it's the only thing that's relevant is risk reward, because you can't really control how correct you are, how many times. And the best traders that I know, and I know a lot of the best traders out there, they're not right more than 60% of the time anyway, right? So if you have to spend your time focused on something, I think it's definitely just, right, how do I get more out of my winner? That's an old note. So I'm basically just looking for these areas that I drew in, right? So this bat, if it gets over $1, I'm interested. Under $1, I'm not. So that's how I'm supposed to go through them. Oh, you're prepping. I won't be on super late tonight, but I just wanted to get this done because this is where, again, this is the same work that I do by myself every night regardless. So what I do is just one day a week, I turn it on to chat with people as we go, but I go through these same lists by myself every single night, bar none, right? Trading, I think, is certainly not a lot of work compared to a lot of other things that go on. And most of the work's front loaded, which I mean, developing your plan and learning the markets and all of that. And then after that, you get to do way less. But I think this kind of work is very, very important, right? Where it's, yeah, I'm still watching this Axis USD. So it broke this trend line and now it's kind of putting in this little bull flag here. So if that turns higher, I'm interested in it. And you can see, like, even more than Cardano, how it's holding up relative to its support zone. It's actually holding up a little bit higher, so that puts it in a little bit more of a bullish camp for me. But so yeah, I think the work that you do, this, scanning and strategy building work is super important. So I'm here every day doing this. And then again, for the website, I just put it into a neat little blog post and upload it. And then once a week, I just come and chat with you guys while I do it. But that's about it for, like, this mana. Again, it's got to get back over this level right here. This is just the anchored VWAP from the breakout. You can see how significant this level's been in the past. So above this, I'm interested, but below it. And I like to summarize all the markets before I move on to the next one. And for Bitcoin, or for crypto, it's not exciting right now. What I will say is that the correlation between Bitcoin and tech companies has gotten even tighter. It's been tight for a while, but it's getting tighter and tighter as things go on, just kind of showing that it's being treated as a risk asset now. And again, there's going to be some Bitcoin maximalists that I'm sure are going to be upset with that, but that is just how the market is treating it. Bitcoin goes up when you're kind of on a risk on environment, right? When people have a good risk appetite, and then they're selling Bitcoin when they don't have a risk appetite. So the same thing could be said for the Qs. So I would watch those closely, but nothing is super exciting right now. A lot of these things, like I took some of this NGen coin when it broke out of this downtrend line. I was stopped out of that for a tiny little loser. But just a lot of fake breakouts, a lot of ugly price action. I still like this chart for a longer term look, but now it's got to get over that hump before I'm interested. So, as long as we're in this more worrisome environment for the markets, I think you have to be careful with Bitcoin. Beauty of it is that it will show you when it's ready. I don't think you're getting, these $20,000-$30,000 spikes out of the blue. I think you can wait until you see that. So now let's go from cryptocurrencies to normal currencies. So I've been kind of highlighting this zone. Anytime you see these shaded zones on my chart, this is just how I draw support and resistance. I hate support and resistance lines because it's never a line. It's always an area. The old saying in tactical analysis, right, to draw your lines with a crayon, not a pencil, because they're areas, right? So this area right here on UUP, which is the dollar index, has been an important area for a long time. So I'm going to remove this line. I don't think that's valid anymore, but it's put in this big cup down here, and then it's had this nice kind of handle pattern going on for a long time. So as long as this, as long as it's fighting this zone right here, I think the dollar is interesting. If the dollar moves higher, that's going to obviously be bad for anything denoted in dollars, like gold or Bitcoin or any of these things. So just note that. So the reason I look at this in the beginning when I look at the currencies is because a lot of these currencies will have a look based off of this, because most of the currencies that I trade are denoted in US dollars. Oh, cool. I don't know that name too well, but it's a super common chart, right? If there was a science to trading, that science would get arbitraged away and then it would no longer exist, right? So it's always an art type of thing. It's always a zone. You can't just say the price will stop right here and predict that. But so what I'm always looking for is zones at which things became significant, right? So there was a turn that happened here and here, which is where I drew that zone, and then it also happened here as well. So where did sellers take control? Price moved up and sellers took control there. It moved up and they took control here. And then way back here, it pushed up and then sellers took control here. So then it sold back into it and buyers took control here. And then it came back into it and so far buyers took control here. So this zone right here is certainly significant for UUP. So that's how I draw these zones. And you'll notice that they change in thickness and stuff, just depending on kind of what I'm seeing in the chart. So the dollar looks like could be strong. It was a strong close on Friday, the dollar moving up. Generally speaking, there is some inversion to dollar and equities. Just, if you're selling stock, you're essentially buying the dollar. And if you're buying stock, you're essentially selling the dollar because everything's denoted in dollars. So that's a common correlation that you'll see a lot of. But again, the main reason I do it is now when I look at Euro USD is I was playing this this bear flag right here. We had this big rounded top, then we had a bear flag at the end. So right, it's almost the inverse of that chart. We came down. I took a little tiny bit out, but it's like nothing at all really. And then I was stopped out break even. But if the UUP looks like it's breaking out and Euro USD is going to break down, it might be time to re-short on a breakdown. So if this is going to continue lower, I may enter this short again as this breaks down as a way to profit off dollar strength, right? And then I can do the same with GBP. You're going to get somewhat of the same view. I had this anchored VWAP drawn in, and this has been a great kind of short every time it's failed at that. So I'm watching this as well just to see if I can take another short off this AVWAP here. You know, one of those, just keep doing it as long as it works, and as soon as it stops, it's time to get out. The yen, so I was triggered. I'm still in this, but so I'll update the chart. Where this broke out and then sold back down, right? So I'm in this as it broke out. I'm underwater a little bit. My worst case stop is down here. But basically just trying to see if this bull flag here will continue in the yen. So basically everything just goes off the UUP, right? So again, if you own dollars, that's good, right? They're slightly going up in value versus other currencies. Not that most people even care about that. But again, a lot of this analysis is just to see what playground we are playing in, right? So we're playing in one where crypto's kind of lame. It's not really doing anything interesting right now. Bitcoin's got to hold that 41,000. It's sitting on the edge. For the dollar, you know, the dollar is looking strong, but again, that's just versus other currencies. However, that means that there may be some strength in foreign equities. So again, I do all of this, even though I'm a systematic trader, which means I have setups and trading plans that I just trade regardless of what's going on in the market. I always like to know kind of what playground I'm in, which is the reason that I go through all of these. So now we're going to go through our ETFs. So now it's time we're going to talk about individual stock names after we take a look at what's going on here as well. Do I ever trade against the trend? Not the short-term trend, no. That's one of those things that's like a super subjective, it's just an insanely subjective thing, right? So just use this chart of the SPY, for example. Is this in an uptrend? Well, yeah, from the daily time frame, for sure, right? We're in a, draw that better, right? Higher high, higher low, higher high, so far equal low, higher low. So until this thing breaks down, we are in an uptrend. So that means I will mostly be long. But it's like if you zoom in and you just looked at like this last little bit, well, we have a double bottom. So we have a high, and then a low, an equal high. So we've got maybe a little double top going on. So it's one of those things, it's all time frame dependent. So for whatever time frame I'm looking at, I'm always trading with the trend, right? So that means, you know, I will trade like rounded bottoms, which if you zoom out is probably a stock in a downtrend. But for it to be a rounded bottom, it has to be going in an uptrend for the last, you know, like week or two. So for my time frame, that's still an uptrend. So it's just one of those, yeah, certainly time frame dependent. So I don't think there's really much to add to this from the note that I had. So all these existing notes are the ones that I would have had that I've done the blog post Thursday. Often, just like this, they can be recycled. So I'm just going to add in just a, right, this is what they would call a micro double top. So 460 on the SPY is what I think you really need to watch. And then down below here, it's 430. So as right? We came up, we hit 460, we pulled off it a bit, we hit 460 again, we pulled off it pretty significantly. So if that's a little micro double top, we need to push down. And then this highlighted zone down here is a break and a close out of this zone, is where we will officially, for the first time in a very long time, have a change in trend, right? Because then we would have a lower high, and then that would be a lower low. So that would be the first change in trend. That would be pretty significant. Do I go both long and short? No, I don't like to. I don't like to short stocks from a swing trading point of view, and the reason for that is that it's way easier to have a stock gap up, like especially if you're trading, beaten up names or whatever. It's much easier to have a stock gap up like 20-30% or whatever overnight than it is really to gap down. And because you're shorting on margin, that would hurt you more. So if I'm going to express a bearish synopsis of the market, if I think the market's going to go down for an extended period of time, I'll buy an inverse ETF. So what is it? SPXS? Is that it? Yeah, so that would be an inverse ETF. But however, I just think a lot of people say if the market's going to go down, I'm going to short it. And they don't understand that how different of a game shorting is and how much harder of a game shorting is. So what I generally do is if the market's going to go down, I'm going to develop a strategy and I'm going to look to play bounces, because as the market kind of goes on and as things continue, you will get way more. The biggest bounces, the biggest rallies happen in bear markets. And this is something that it's easy to conceptualize once it's said to you, but people don't really think of it off the bat. So, if a market tanks 50%, well, when it bounces, even if it gets really shy of where it was before, it's still having like an 80% bounce, right? So the biggest bounces are always in these bear markets. And you can go back to 2001, you can go back to 2008, wherever you want to go for these extended bear markets, and you would be way better off looking to play bounces instead of looking to short. Because, right, if the market sells off, right, so say the market goes down 50%, for it to get back up here, that's a 100% rally. But say it sells off and it only gets to here, that's still probably a 60-70% retracement of this move. So, you could try to short on the way down, or if you can time these bounces, that's a better way to do it. And I have a couple strategies that I do that. So that's how I look more at a bear market. If we're going to be in one, I think it's just way too hard to. The way I've been looking at it is that I think we are in a tale of two markets, right? So this is the RSP, which I'm going to leave this note that it's still super strong comparison, right? And the reason I always point out the RSP is that the SPY, like before the sell-off, Facebook was like 7% or 6% of the SPY. Amazon is like 5%. Netflix was a big percent. Like all of these names are a massive percentage of the SPY, whereas the RSP is an equal weighted version of the same thing. And you can see how much better this is holding up. So right now the RSP is just saying, right, and I'll just put this in here. RSP equals SPY minus Facebook, right? So I'm going to update that. Right, so that's essentially what I'm just saying, is that you have the SPY, which, right, keep this image in your head. And then when I go over here, how much weaker this one's been, But if you take out Facebook, which is a large percentage of the S&P 500, you can see how much different things change. So just by saying, hey, I'm going to remove what's tanking, or just, it's not removing it, it's still in there, but it has the same amount of weight as all of the other indexes, you can see how much better the overall market is looking at. So when I say we're in a tale of two markets, I'm basically just talking about ARKK, how this thing is down, and let's just talk about this, I guess, while we're on it. Looks to be putting in a bear flag on ARK. So is this going to be a bear flag that's just going to make ARK continue? And then that's one side of the market, and then the other one is going to be Burke B. Right? And this is Warren Buffett's company. So this is why I keep in, and I've been saying this for ages. Anyone who attends these live streams weekly will tell you, we are in this tale of two markets. So the people who feel like we are in a bear market, or we're near a recession, or something like that, usually they feel that way because they're buying the junk, right? And I've talked to a lot of people who say, man, this market's been so rough. And I'm like, only if you're obsessed with buying the stuff that's getting hammered, that the market has been super rough. Like as a relative strength kind of a guy who does a lot of relative strength trading and investing, I've been in a lot of names that have been, not doing amazingly. It's not 2020 where everyone was a genius and no one could lose money in 2020. But I don't feel that things are as bad as people who keep trying to buy the dip on Peloton and Robinhood and right, all these companies that are getting hammered. They're going back to the well, and it's almost like recency bias, which just means that things that happened recently you think should happen again. And so a recency bias person would say, well, places like Peloton and Zoom and DraftKings, these are great. These are the companies that make a lot of money because when they go up, man, do they really go up? It's like, okay, but they're not going up right now. You know what is going up right now? Like CME. I'm in a bunch of, you can see right here was the chart that I posted for the Stats Edge people. We broke and closed out of this zone right here at 232, rocketed up. I got out 90% before earnings because that's my rule, as we spiked up here, and I still have just a tiny bit of it. So this isn't, right? It's just not the way that, it's boring, right? Relative strength investing and relative strength trading is boring, but it's the way to go. So what's the way to filter for relative strength versus what is not? Well, there's a couple ways, and I'll get through those when we go to the individual stocks. But the first one is just look, is the chart going, right? When you bring up the chart, is the price action starting somewhere down here and ending somewhere up here, right? As opposed to the other way around is the easiest way. Now, when it comes to the actual trading of it, we'll take a look at stuff like, I should actually do this now before I just start this running, before I forget. Like TI Strength, which is available within Trade Ideas. And again, if you don't have it and you're interested, they're having a test drive. Link in the description below, and go try the test drive. But I created a whole relative strength algorithm that will just spit out what the strongest stuff in the market is all day, every day for you. And again, it's boring because you're not going to, like, CME is not going to double for me. I'm not going to buy CME at, I don't expect this thing to become a $400 stock. But, give me a few percentage points, net positive expectancy of a few percentage points, and go from there, right? So let's go through my little ETF list. I think a lot of this is stuff that we'll just know. So like USO, right? So another breakout today. So oil just continues to be incredibly strong. So the reason I go through this this exercise each night is because now I'm finding out what sectors are strong. So oil is strong. Oil services is strong, close to breakout. This oil exports, oil and gas export products, right here. This is strong, right? So now I'm quickly going, okay, anything oil related is strong. So I can go look at oil, right? So if you're looking for something that's going to have relative strength, you got to look to see if you can find. Now, I'm not just going to trade these indexes. It's not why I scan for them. I scan for them because I want to find where is the money leaving and where is the money entering, right? So you can see all of the annotations I've had to XLE that, hey, we should take a look at this thing, and then it broke out. And then I had probably somewhere around here that it was outperforming the market. And right now I'm saying it's still, energy is still super strong, but long in the tooth. And I'm going to remove this, and we're just going to add, is there another bull flag going on here? So are we going to have another lag in energy? Right? So that's one way to just quickly say, okay, what is relatively strong? Go through, and you can Google this anywhere if you just say SPY sectors or SPY sector ETF. It will give you a list. 'Cause that's all these are sectors and industries. So MOO is just agricultures, right? So agriculture looks strong, like it could potentially break out. Where then I look at, okay, home construction is not relatively strong compared to the market. Water is not relatively strong compared to the market. Right? Consumer discretionary, and consumer discretionary is just people buying shit they don't need, and that's not being relatively strong. Solar is getting killed, right? So I put this note here for possible bounce was when it was kicking around this area, and you got like a tiny bounce, but maybe solar's putting in a bear flag. So that would mean that things like EV plays and stuff like that are probably going to be suffering as well. So, and if anyone wants to Google more about this type of analysis, it's just simply like a top-down analysis, right? You saw that I went with the SPY and the RSP first. So those are the major market sectors. And then from there are the major kind of conglomerates, right? And then down from there is the individual sectors. So now I'm going inside the individual markets and saying, okay, what's going on here? So this FDN is the internet, just basically an internet index. And so you can see on an internet, it's a big rounded top with a little bear flag at the end. So these growth names are, all of them seem to have this same view, this kind of bear flag type of look. So MDY is our mid caps. So these are all the not smaller cap companies. So mid caps is between 2 and 10 billion, I think. And you can see how this compared to the RSP, how the mid caps are kind of barely holding support, right? Just kind of barely holding support here. Right? Industrials are holding that support, but still barely. And then XLK is our technology fund, and how this is just bleeding down in comparison to. It's got this same little double top that I pointed out on the SPY. So you can see the RSP is actually doing okay, but the SPY is looking really close to this technology ETF. So tech is bringing us down. So if tech is bringing us down, we have to say, well, what's holding us up? So I have this note for consumer staples, right? So how I said consumer discretionary is people buying things they don't need. Consumer staples are people buying things that they absolutely do need. And if we are going to enter kind of turbulent environments, looking at what people actually are going to need anyway makes sense. So Procter Gamble, like just food manufacturers, things like this are going to be very, very important. This one I'm actually really interested in. I put a couple notes. I think I was looking at the weekly chart. Yeah. So this is just your metals and mining ETF. So maybe time to look at miners. Not so much precious metals, so not so much gold and silver, but more about this is another one. More about, iron and copper and things like that. So KIE is our insurance sector. This is looking strong as well. Berk B we already talked about. And then we go down to some of the stuff like Joe. Joe is just the coffee ETF. So you're seeing a lot of things like commodities doing fantastically. And then you're seeing a lot of things like this is a clean energy ETF doing poorly. So think ugly, dirty, gross, old businesses. And then when you're thinking new, fancy growth businesses, those are the things that are getting hammered. So that's why I said that I think that we are in this kind of tale of two markets. If you're someone who started investing in 2020 when you would just kind of say, hey, you just buy these crazy tech names and you make a bunch of money, you're getting hammered right now. And if you have a relative strength method where you're just looking at whatever is going up and trying to get in those, then you're doing fine. So IBB is biotechs. And this is why I never understand people who trade certain sectors. Like people will tell me, "Oh, I'm a growth trader, or I am a biotech trader, or I'm a this, or I'm a that." My question is always why? Like why have that loyalty? Like what does that loyalty serve you? Because IBB is just looks like hell, right? So this would probably be the last note from here. So again, I like to summarize each sector before we move on. We'll start looking at stocks, and I see some questions there I'll do soon. But my notes, which again, I do this daily for the Stats Edge Pro people. So my notes have been the same for a very long time, which is if you're investing in growth names, you're in a bear market. If you're investing in value-driven names, you're in a bull market. So it really is up to you depending on what it is, like where you want to hang out. Another way to do it, this website is Koifin. No affiliation until they notice me, till I get so many likes on all these videos that these people start coming to me. And this is essentially just a relative performance chart over the last week. But hell, we can do year to date to make it super clear. So, right, this dotted line right here is 0. So anything under this is down on the year. And anything above this is up on the year. And again, you can see XLE is carrying us. XLF, which is your financials, are doing well as well. Everything else for the year is negative. So if you were invested in anything except energy, and the thing is, you don't need a magic 8-ball or anything for this, right? You can see that these trends started early in the year and they continued, and let's go even 1 year. So you can see kind of when this broke out on a relative basis to everything else, that's what you want to look at. And then communications. Anytime you see communications, just know XLC. Oh, my face is blocking. You are right. Let's just move that for now. Doop, doop. There. I'll pop back in a second. But basically, you can just see XLF, XLRE, which is real estate. So real estate, financials, and consumer staples are up. These other ones, these discretionary type things, are getting hammered. So again, just a tale of two markets. Where are you putting your time and energy, right? Another thing I always go through is this website's just forexfactory.com, and this will just give me the eco news for Monday. And I just highlight anything that will be market moving. So at, well, why is that time zone all messed up? Save settings. Okay, let's actually delete that. I don't know why that had a weird time zone. Yeah, so what it will just do, this website just tells you based off your time zone what's going on. So at 11, we have Fed Bullard speak. So that might be market moving. So I just want to know about that. So really, again, just to summarize the market before we go into individual stocks, and this is another way to look at it. Not this one, but again, depending on where you're deciding to invest your money or where you're investing your focus, you're either having an okay time or a really bad time. And if you're having a really bad time, I think you should go back to your charts and say, what have I been trading? Have I just been stuck on trying to buy dips on growth stocks? Or have I been cycling out into whatever's the strongest at the time? Because I bet you if you're cycling out, you're probably having a pretty good time. And if you're just dogmatic to trading XYZ, you're probably having a bad time. All right, I'm going to scroll up a bit and we're just going to go through some of these. I think the MCD on how cheap labor would be with all the people, the ARC people buy the dip looking to work soon. Oh, it's a joke. I get it. Ha. But no, it's yeah, there's a lot of people out there. And again, for someone who works with and consults with trade ideas, we saw a lot of people out there that in 2020 were like, I'm going to just trade for a living because this is easy. You just buy stuff and it goes up. And then they saw in 2021, 2022, how that's not the way it works. Every now and then you get an easy one. And 2020 was an easy one. You just had to buy anything that looked like it would profit off a pandemic, and you made a whole bunch of money. USO close to the top of its channel. I don't really do channel analysis. I'm more of a horizontal support and resistance guy. I just haven't found channel analysis work too well. What I will say is I agree that oil stocks look a little bit overextended right now. Like I probably wouldn't be diving into them headlong here. I don't like to buy things that are overextended. I like to buy things that are breaking out. So what I would do is if they're setting up now, I'd probably take a look at them. But without doing channel analysis, just because I don't, I can see, right, it has been like 10 weeks in a row up. So it may be time for a little bit of pause on that. Now's the other time. Now's the time where I will look at individual names as well, because I need to go. And now's when I'm going to build the watch list for the Stats Edge Pro people. And again, myself, because Stats Edge is not a signal service for sure. Yeah, see, this SLGG is exactly what we were talking about at buying junk stocks that are just getting hammered. Your life is way harder when you're doing stuff like this. So my thoughts on it, I wouldn't touch it with someone else's money. It's just absolutely getting murdered. So could you time a pop on this? For sure, maybe. Do I think that's the easiest way to live your life? No. Right. X, CLF, they're both, so X is up too many days in a row for me to be interested here. CLF, same kind of thing. Depends on your trading plan. But, CLF, I look at this as it's in a pretty decent downtrend here. So I don't like to buy things. I want to buy more pullbacks in uptrends as opposed to trying to guess downtrends. So this is the thing. It's funny. There's this human thing that like I can't program out of a lot of people. There's people I know. There's people in Stats Edge that they cannot get their heads around about. They, and I think, and again, I don't mean to pick on you for this SLGG, but this stock has been getting hammered for ages for a reason, right? It's not a good company. I don't know what they do. I don't need to know that. I just I just know it's not a good company. So could it bounce? And I think what people do is they see this on the chart and they get addicted to it. Well, if it just gets back, right? It's here right now. If it just gets back to here, well, that's a double. That's crazy. I could double my money just if it just gets back to this area. But you've got, again, this downtrend going on here. So, do you want to buy stocks in downtrends? You can. And if you nail it, you're right. You'll double your money and it will be great. I think it's probably better to buy stocks in uptrend. But I think what happens is that people get so worried that they're going to be the one to top tick the market, right? That they don't want to go through and actually buy the stuff in the uptrend. They think the second they buy, that trend is going to be done. But what I will say is the only reason that technical analysis works consistently is that we know that trends persist longer than they should, right? I did a video. You should go back on the channel to the video that came out on Friday, which is part of my Demystifying Indicators series. And I talk about how the market is not normally distributed. It has fat tails, which again just means trends on both sides, up and down, persist way longer than they should if the market was normal, right? It's Dan. I love Dan. As Dan would say, when you put in a trade, there's only 4 things that can happen. Yep, big win. Exactly, right? Big win, small loss, small win. You just want to avoid that small loss, right? That's all there is to her. How about AMD and Nvidia? Again, if these meet your written and tested trading plan, then trade them. If you don't have a written and tested trading plan, then you're gambling and the market will take your money. So for me, these are my time frame. These are still in downtrends, right? If you're looking at this on like a weekly chart, then maybe this is in your time frame an uptrend, right? There is no holy grail in the market. I'll say that right now. There's none. If you think you figured it out, you haven't. Yeah, IRNT, another awful, beaten down, crappy name. So no, I wouldn't touch any of these. And again, I will never. If you have a system in place and it's making money, and you're happy with it, and it is buying stocks that are in just like this is like a death march down. And because if you look at IRNT, we got what, 2 months down and then a little spike and then 4 months down. So if you think you're the guy who's going to be able to time that little spike, awesome. Good for you. It's not me. I'm not going to do that. What I'm going to do is I'm going to find stuff like EC here, right? Push up. Now we're pushing sideways a bit. Maybe we break out, right? On the weekly chart, moving up. On the daily chart, moving up. I'll go from there, right? CTVA. It's interesting. I don't really see a technical pattern here on the daily. On the weekly, it just had a breakout. So if you're a longer term, right? Just broke out of here on the weekly. It's in the ag space, and we talked about how agricultures are doing well. So a little bit on the short-term chart, this is a bit overdone for me, but UNG. Yeah, that for me is still in a downtrend. And we just might have different styles, right? It's not knocking your style. And Boyle is just ultra. Yeah, watch these triple and quadruple things. These are meant for really short-term trades. Look how Boyle was a $500 stock and it just bleeds down to nothing. It has to do with the futures in them that degrade them, so be very careful. Like these are meant for short-term trading, like intraday to a few days. They're not meant for long terms, but UNG again is in a downtrend. In my time frame anyway, again, it's going to be different. It's why I will never run a signal service, because the way I trade is going to be different than everyone else. It's why I sell my research. I don't sell my actual trading signals, because I just don't think that works, because you have to find something, you have to build something yourself that does your own personality. You've nailed it. I had feared personally top ticking a stock trend, but who cares, right? So let's go to CME again, which is the first thing that I took that was a breakout of a long-term trend. So I bought it when it closed right on this day. So what if that was the high, right? And it sold off from here. And I stopped out under 220. How is that any different from buying something that's selling and then it continues to sell and you get stopped out? The amount that you're risking, whether you're buying at the top of a trend or the bottom of the trend, is the same. We just know that trends are going to continue more often than not. So if a stock is going up, it just means a bunch of people are buying it. If the stock's going down, it means a bunch of people are selling it. And more importantly, if the stock's been going down forever, it means that a bunch of people are bag holding it, right? So, for example, the people who want to get the turn in Peloton, you have to look at a chart like Peloton and say from 150 down to 20, how many people in this stock are holding really fat bags? And they're going to say, hey, if this thing bounces, I'm going to get out. So that's overhead supply that's in the waiting. If we go to CME, how many people in this stock are in that position where they say, man, I just got to get out of this stock? Not nearly as many, right? So you will often top tick a market if you buy a breakout. That'll happen all the time. It will happen half of the time. But who cares? If you're trying to bottom tick a market, you're also going to be wrong half the time. It's just which of those things are going to have a longer persistent trend when you are correct, right? And that's why I say I will trade around a bottom. Like I think you were happy when I put LLNW on the list, right? This thing I look at way different. If you, for example, if you zoom in, so, right, I'm trading off this massive round of bottom that's occurred, but if you zoom in to kind of our time frame, you can see that at least over the last couple months, this thing's been an uptrend. So, again, trends always time dependent, right? You could have something that's getting hammered on a daily chart, and if you're an intraday scalper, it's going to be different. If you're a weekly trader, it's going to, right, it's all dependent. But in the last little bit, this thing's actually been an uptrend. So you can trade these rounded bottom type patterns on the longer term chart, and then just make sure that on the shorter term one, you've got the trend in your favor. Some people plan, so yeah. There's so many people who are just like, I buy growth stocks, or I buy hammer beaten down stocks, or I buy, and I'm like, again, if it's working, great. GMA is a little better. It's in a chart, but I don't understand the predication of buying stuff that's hammered. So, and this is another psychological thing that I think causes this. I think a lot of people think the top of the chart is resistance. Like they think that up here is a resistance point. Like it seems silly, but I think it's psychologically true, where people have this, oh, we're right at the top of the chart. That's a resistance point. It's like, no, it's not. Just like the bottom of the chart is not a support point, right? These are just random areas that people cut off the charts for viewability, right? The bottom of the chart is not resistance, and the top of the chart is, the top of the chart's not resistance, the bottom of the chart's not support. So people try to buy at the bottom of the chart, and it all comes back to the the old adage of you buy low and you sell high. It's like, do you? Right? Do you really? Like, if you go to Apple, was it better to buy Apple, as the thing was tanking, or literally did you just wait at any point till this thing was in a trend and you buy it? Right? We're back here at $20 in 2016 and the thing's in an uptrend. Right? So at any point, was it better to buy the thing as it was breaking out and moving higher, or was it better to try to pull it? Now, right, when it comes to shorter term trading, you can buy pullbacks. There's nothing wrong with that. But for me, if I'm buying a pullback, speaking of which, I got to run this scan. If I'm buying a pullback, it's going to be a pullback in an uptrend. I'm not going to buy a pullback in a downtrend, right? Do I need to get out of Microsoft? All about what your trading plan says. If your trading plan says time to get out of Microsoft, it's going to be time to get out of Microsoft. If you don't have a trading plan, you're a gambler, and at some point the money is going to take your market. See, again, Microsoft's a nice downtrend for me. But it's all about what your particular trading plan says. And again, if you don't have a trading plan, the market's going to take your money. It will at some point, right? There'll be times you'll be on fire, and then there'll be times that you're going to get your ass handed to you. And if you don't have a plan, away you go. So yeah, REI is interesting, Brett. Like, it's energy play, which is interesting. If you want to play that kind of rounded bottom look, the thing, again, I like about this is you're not buying it as it's doing this, trying to catch the bottom. You're waiting for a little bit of an uptrend to present itself, right? So you don't have to be the first one in buying the bottom, right? That's a perplexing thing about the stock market. A person can go long and the second person can go short exactly the same price, and they can both make money on their trades. Yeah, it's all time frame dependent, right? This is why it's very important that, I know I hammer on this, and I know it's probably boring to anyone who watches me for any length of time, but that's why it's so important that you build your own trading plan and you follow that religiously and you block out all the noise. Because you're right, I could be bullish a stock and someone else could be bearish a stock. And if maybe that person is bearish for 2 days and I'm bullish for the next year, that person could be right and it could drop for the next 2 days or a week. And then it could be up from there 2 years from now. And it's because everyone's got their own time frame and everyone's got their own goals with it, right? So I'm going to start going through the list as we're having this chat of stuff we were looking at. So WNC, for example, was one thing that we were trying to catch a pullback, right? This thing is a very strong uptrend, and it had a little pullback here. It met a algorithmic requirement that I have, so I'm going to keep that one on the watch list. MRCY, that's got to go. These bounces I want to happen quickly. That's been going for too long. PGR, keep that one. Again, we're looking for a pullback in an uptrend. This is Progressive Insurance. Remember, we saw the the KIE, the insurance index, was doing well. ATCX is another one that, yes, this one's down a bit, but instead of trying to buy it as it's tanking, I waited for some buyers to come in, and now it's consolidating, so I'm going to leave that one on the list. Yalla, again, beaten up, but putting in a really long base here, so I still like the look of this. This is another strategy that I'm playing with that I'll just go over briefly, but just looking for these bull traps or these bear traps where it pushes under resistance and then looks up from there. BKE has the same look, so I know I'm going to keep that one. LZ I have on here twice for some reason. That's got to get removed. I don't like that one anymore. MMC. I can't even tell you why that's on there. So I got to get rid of that. And then AUB, which is a bank, right? Nice looking, right? This is just an example of buying the strong thing. And we've got a commercial bank putting in a nice looking bull flag here instead of trying to pick the bottom in something like Peloton. LLNW, same kind of thing. Right? Nice, strong. We already went over this. Nice, strong looking name. Holding up really strong compared to the market. So I'm going to see if this one continues. One thing I love about this is that it's what's called post-earnings drift, where it reported its earnings, and that's what this little pop created. So now it's digesting those earnings. I kind of like when that happens. I'm not going to look at all of those because, again, they're probably all going to look the same. Well, this one actually looks okay. SBLK. These are all shipping companies. Yeah, so they're all going to look the same. So just look at the shipping index for that. Looks, again, overdone. I don't see a pattern here, but at least I think you're getting into a better spot anyway than looking at stuff that's just been getting hammered. GD, General Dynamics, yeah, aircraft manufacturing. Yeah, and, I'm not one to comment on news or anything, but if there is going to be some conflict going on, that's one to look at. A little bit choppy for me, right? AUB does look great. I like the look of that one. BNS, Bank of Nova Scotia, from my home and native land. Looks good. I don't see a pattern set up here, but it's a strong chart. So again, the way I look at it is I go, okay, is the sector strong? Is the stock strong? Does it meet one of my patterns that I have a trading plan built for? So it's from a strong sector. It looks strong. It's not showing a pattern that's part of what I look at. Slumber J, SLB. Yeah, that looks nice. Actually, I'm going to steal this one. I like the look of that one. So Slumber J, I'm going to look at this one at, I don't know, it's 41.39. I like the look of that Slumber J. Because again, so this one's in an industry that's strong. It's a strong stock. And then it's a pattern that I like, which is just, your very old school typical bull flag. You get a strong push up, you get some consolidation higher or sideways, and then you get a push from there. So it just makes you're trading with the trend, you're trading with the strength, and it's easier, right? UBS, again, it probably looks like the other financials. Yeah, again, stronger, but I just don't see a pattern there. I'm going to skip past some of these because CAG, I'm pretty sure made it into TI strength, but I want to steal this one as well. So I'm going to do this one over 36. I'm going to go CAG over 36 and then 35. These are more boring names than I normally play, but the only thing that's working well are the boring names. So I think it was you, Boston, who was saying, how do I find relatively strength names? Again, if you're interested in trade ideas, down below, click on that, go to my website, say hi, but there'll be a link to trade ideas there for $11 for the next 2 weeks. You get trade ideas. And TI Strength is an algorithm that I built and I back tested versus buying these stocks versus the S&P 500 for 5 years. It outperforms. Again, doesn't mean it prints money every day, but it outperforms pretty handily. And essentially what it does is just that. It just looks for relatively strong names. So the algorithm assigns weights to things that I deem to be strong. So, if it's in the top, if it 20% of its range, of its lifetime range, right, give it 1 point. If it's above the 200-day moving average, give it 1 point. And all of these things. So it's a weight of the evidence approach to trading. So the higher, if it's on this list at all, it just essentially means that these are the names that are highly ranked in the relative strength algorithm that I made. Now that doesn't mean that you just buy them, right? It means you take a look at them and you say, okay, what is there a technical pattern that you like? Is there a way that you can play off of these? And quite often there is. Oh, BKR, I had this on the list forever, and I missed the breakout. And then also, just by going through this list, the other thing that you'll pick up is where is the strength? Because if it's not on this list, it's not technically strong. So you can see that so far everything we've clicked on has something to do with crude oil, right? LNG, we are in LNG for, like, I'm still in I think a lot of it. I think at least half of it. This LNG, we bought this, if anyone remembers, we were looking at this pattern and it broke out. I sold a chunk here and then it pulled back and I think I had to stop under this area on a closing basis and it didn't. So I'm still in some of this. But again, a lot of this is oil related. So it's important when you see this stuff that you don't get, and there's your Slumber J, right? Don't get too weighted in them. Like, always look at what you hold, and if what you hold is all one sector, you may want to look at that as well. It just means your returns are going to be more skewed, right? If you're right, you're going to make a buttload of money, and then if you're wrong, you're gonna have a hard time. So this is an infrastructure fund. I think I got out of most of my gold. I'd have to check. Yeah, so I got short, but I'll get back in. I still think gold's a short. So what I was looking at in gold, essentially this downtrend line. So I played a short off it here, and then covered a little bit down here, and then I re-added to my short here, and I covered a little bit down there, and then I think I got stopped out. I'd have to check my account. I'm fairly certain I got stopped out on Friday. But if this starts to pull off this trend line again, I will short again, right? So, again, my theory behind gold is that we are on the verge of war. We have the highest inflation that we've ever had. Where are we going to go from there? So, Brett, that's interesting. So you point out the higher lows and not the lower highs. So that's something that I would check and say, is that your bias? Because you're right, we have higher lows, but then we also have lower highs, right? So are you only looking at one side of the coin and maybe not looking at the other side of the coin? Right? So I see the higher lows, but I also see the lower highs. So I see this, right? A little breakout here. We'll see how long, if that holds. If that holds and continues, then that means this resolved to the upside. My bet, what I was trying to position myself and trading around that position, is I was just trying to bet a break to the downside. Because my theory being that if gold hasn't run during all of this period of time, right? Is it going to now, or is it going to just break down? So I was just playing for the breakdown, but that should be interesting to you that you're pointing out this side of the equation, but not that side of the equation. Yeah, that's a whole lot of fundamental stuff I don't care about. Not to be rude, I just don't care. It just doesn't affect me, right? It's fundamental stuff about oil, right? My question is simply, is it a strong stock? Is it something that meets my written and tested trading plan, right? Is there, right? And that's it. Do I think it's going to go up? Right. So like this SSRM is interesting to me as a gold mining company. So maybe this is where I'll put my money for a gold mining company. And this is just basically for on a percentage basis, I think you're way better off hitting the individual companies. But the other thing that's interesting is this is the first time in a long time that I have seen a gold miner inside TI strength. So, and this is why I love this algorithm so much. Again, I'm biased because I'm the one that created it, is that it just shows me this is the stuff that's strong, right? And I can just shut off. So basically, according to this, it's financial, gold, and oil. And this is, again, there's only one gold thing that made it in, but there was one silver thing. And precious metals have just underperformed the entire world. So maybe it's becoming the time where these things are relative strength. Because what will happen with just a little inside the way the algorithm works is that if something gets overextended, its points are taken away from it to make sure that it's not just chasing whatever the last move was. It's legitimately trying to look for underlying strength in a name. So seeing a silver, seeing a gold, it's kind of interesting. So that makes me want to go to SLV, which is the actual silver miner. So, and again, this is how little I care about my own opinions. I kind of like the look of that silver miner and gold miner. And actually, I'm going to back that up and I'm going to put this gold miner on the list and say if we get over 1775, I'm going to be interested in this. And if we get under 16, that's where I'm going to stop out. And I think that's important. And it took me so long to get here. And I don't know if it's the gray hair or the gray in my beard, which the camera actually does a really good job of cutting out. But as soon as I stopped having opinions, and this is one of the reasons why I tell people to avoid the news as well, because it will create opinions in your mind. As soon as I ignored all that and went kind of full systematic, that's where things started to make way more sense. So if gold and silver are going to be the next things to rally and they're going to be stronger than the rest of the market, I'm going to own them. Even though in my head, I don't know why gold exists, like as the currency it is. It's not an inflation hedge. We've proved that. It doesn't help when we're potentially in like World War III. So that's not a thing either. So it's like, what's the point of it? But I won't care because if my algorithms say that it's strong, then I'm going to buy it. And that's it. And that's something I get a lot. If you guys don't follow JC from All Star Charts, I highly recommend it. He's a really good guy. Hold on, sorry. No, this one. I really highly recommend him looking at him, but he's one of those where he's just a very staunch analyst, right? When it comes to just pure technicals. So he's kind of in my boat where it's like I don't care what's going on. Oh, that's not. It's this one. So I will more follow him and his mentality of I don't see why there's a value to gold, right? Where it just doesn't do anything. But if that's what's going to be strong, that's what I'm going to exist in. So This algorithm right here is a newer one that I'm playing with, and I'm basically hunting for pullbacks on this one. So AEP, for example, I kind of like the look of that. So you'll actually probably see me do a lot of, you can follow me on Twitter. If you don't, it's just Michael Nah CMT. You can also, on my website, there's an email list there that people will tell you I don't spam. I send you an email if I do a new blog post, and I send you an email once a week to remind you of the live stream and share with you any videos I made, and that's it. I won't sell your email address. I don't like any of that shit, so I would never do it. But you'll probably see me switch around here a lot. Oh, looks like I already, okay, that's probably why. So I do like AEP, but I like these horizontal lines that TrendSpider has telling me that earnings is really close. So no longer really interested in that. Workspaces, there. So that's kind of how I look at that. You can see the number up here, but the question is kind of when. So apron, yeah, I think that's going to be way under that, so that's fine. So for this one, again, it's just a pullback algorithm that I'm working on. That's just trying to find, most of these names won't be strong names, but the point of the algorithm is that I just scan through all of them and then I try to find what's strong with my own eye. So that's interesting. So that's 1, it's 2, and that's 3. So that's a most boring name of all time that we're going to put on there. So what's that, like 8079? That's not 80. Can you think of a more boring name to trade than Colgate? The toothpaste maker. But, right, if it's the only thing that's showing strength, that's where we got to go. It just means that it's less fun and we make way less money than if we're doing something like, buying growth names that are going to double. But no, I don't see anything there. PANL. And a little rounded bottom look, but again, I need to see some sort of pattern out of it. So as far as I can tell, all assets are supply and demand. Kind of point to TA. That's right. Sorry, I have one of the Steve's doing up the trade of the week, and he wanted to know what silver name. So we're just talking about, because he's a gold and silver guy, and I just mentioned that I have never seen, since I created the algorithm, I've never seen gold and silver on the TI strength alerts. So the fact that they're there is, really interesting to me, and I may actually be just flipping my opinion on gold altogether. So yeah, I like this comment. As far as I can tell, all assets are supply and demand, kind of point to TA. Well, the whole point of TA is technically, if it's a free market that you can chart, a lot of the same things will exist, because technical analysis, and this is why I'm doing this demystifying series. If you haven't seen this, check it out and give it some love, because I want to make more, but so far the views are not doing amazingly. And that's just how I judge it. If no one's going to watch it, it's just not worth my time to make it. So it's these little, Jess is doing my thumbnails now. So these ones with me with a little wizard hat. But the basically I'm going through the mathematics of all of the indicators and why, and talking about what they really mean and how you really use them. Basically, it just boils down to these things are trading is all psychology, right? So if you can buy and sell it freely, then you can you should be able to use TA to trade it, which is to say, find a trend, find a way into that trend, and go from there. Do we put both Colgate and General Mills in our? I guess we kind of have to, right? Like, what a what a boring watch list when you have Colgate, Palmolive, and General Mills in the same friggin' watch list. But right, it is what it is. So you can. That should show you how much the market is value driven right now. When cereal and toothpaste is, that's what's going as well. Can I please give more insights into the pullback checklist during the monthly Stats as Pro? Yeah, I can. Well, again, the part of, so for those who aren't pro members, once a month, near the end of the month, I sit down and answer any questions that pro members have. It's a web live stream for just them. And I will stay there for, like, these guys know, sometimes they're like 3 hours long of just, what questions do you have? Here's your answers. Now, what I will say, Brett, is did you watch the last one? Because the last one, the recording broke. But I did a recording over it. If you haven't watched the last one, I would watch the last one, because I went where I came up with the idea, the way that I tested it systematically, what exactly it's looking for. And again, I'll do it again if the recording I did is not good enough. Just remind me during the actual webinar, because I'll forget between now and then. But yeah, I went through. Right, this is how I came up with the idea. This is why I wanted to build it. This is the process I went through to build it. Just right, the whole soup to nuts. But I want more insight into actual criteria. Yeah, for sure. But simply put, right now, RSI outside of Bollinger Bands, right? That's the scan criteria. Pull back to some sort of anchored VWAP from a recent move, right? So that's where Pfizer would get disqualified here, and trading at support. So Pfizer here has kind of 2 of 3. So this one may make it to the list, but it would need to clear this area. But that's it. So like you were talking about PANL, right? So it doesn't have Bollinger Bands outside of this. It's not even pulling back, right? It's down 1 day. It's not near support, and I don't think it's near any anchored VWAP either. Right, so there's just nothing here that meets the criteria. So it's just those 3, right? At support, at an anchored VWAP, RSI outside of Bollinger Bands. So what this scan is, on this scan is actually, so in trade ideas, this is called in the main parallels, in the main version of trade ideas, it's actually called, come on, it's a problem when these virtual machines are like sleeping and then you wake them back up. So yeah, you right click on your Market Explorer, you go to server window, and it's the one at the very bottom, which my face is hiding right now, but it's just called strong stock pulling back. So what this is looking for is you'll notice it's the exact same list that I'm doing, so I can just do it here. And notice how snappy the charts are to update now. Trady has finally got that figured out. But yeah, so what it's looking for is simply the stock has to be kind of in the high end of its recent range and outside of the Bollinger Bands RSI. So the Bollinger Bands RSI, if anyone knows, I'm not a indicator guy. I don't believe that there's any real value in indicators other than quantifying price action to help with scanning. So that's what this is doing. It's basically saying there's this this short-term oversoldness that's happening. So that's basically what it's looking for. It's just strong stocks. And again, you can see in all of these, I don't really see too much either, but there's a lot of energy names that were just pulling back recently. And the last thing I'm going to go through here is the RSI Divergence, just to see if there's any kind of overextended as well. Yeah, for me, price is everything. So I use indicators, mainly speaking, only for strategy development, which is to say so I use it basically just for strategy development, which just is to say it's easier for me to quantify like a stock getting tight as, actually I didn't want to do this. I wanted to do the bull flag. So again, if you're new to trade ideas, actually, I'm going to just do this because there might be some test drivers in here. Again, I never know how many people are in here because I don't want to leave that up. I see there's 19 likes, and I appreciate every time I get likes, so at least there's somebody watching. But we have this window, which we call the New Market Explorer. And basically, Trade Ideas gave me this and said, build algorithms. And it's always going to be updated. It's in an early alpha state right now. But within here, you can see things like this is TI strength that we just talked about. So there's your relative strength. We've got daily bull flag, bear flags, RSI divergence, things that have gapped up and then come down to fill the gap, things that have gapped down and bounced up to fill the gap, three-line strike, which is just a candlestick pattern. We've got some intraday scans down here. We have an 820 cross, moving average cross for short-term trading as well. So what I did to say, and then we have this strong stock pulling back. So that's the one that basically uses RSI and Bollinger Bands. And if the RSI pops out of the Bollinger Bands, it's just saying, hey, this is short-term oversold. TI strength was the one I was scanning through to find names that are just stronger than most. And then now we're in the bull flag one. And the how I did the bull flagged one is basically just looking for stocks that have moved up and are now putting in the Bollinger Bands are as tight as possible. So when people talk to me about how I use strong stock pullback. So it's right here on the bottom. Yeah, this name should change. It's strong stock pullback back, but this should, again, it's just early alpha stuff, bugs working out. So this bull flag, again, it's looking for stuff that has moved up, and now the Bollinger Bands are as tight as they've been in like the last 6 months, I think. And you can see this is where I found that ATCX. It's where I found AUB, right? This BCO is kind of interesting. So again, the beauty of this system that Trade Ideas has is I can build much cooler stuff. The downside is it's not user configurable because what it's doing is so insanely complex that it would kind of fall apart if everyone was allowed to play with it. We would just have to charge like $2,000 a month for the product. So CAG, which we have on the list here, these are all things that are showing up in this bull flag scan, right? So cars, and I can draw these out because some people have a harder time seeing them, but right, a bull flag is just a push up and then some sort of consolidation. So this is just looking for some sort of push up and then some sort of kind of consolidation here. And I like that one, like this one as well. So mostly now my scanning actually just has to do with the Market Explorer within Trade Ideas. Right, and again, just it does a pretty good job of adapting to time frame. You know, it doesn't have to be a very specific time frame. And again, this is where again TI strength came from, which is a full kind of algorithm that outperforms the market over the long run. So like an investment style algorithm. So what I'm looking for now is I only have like a list, another one or two names on my list, and then I'll be taking off. And I'm just looking for something that looks strong, that is not in oil or gas or financials or anything like that, because I already have a bunch of those. It's not to say like there's a lot of these names, like this FCF looks interesting. I just have enough of those sectors, so I'm not interested in buying more into those. Ooh, I like this. Flowers.com. Man, how incredibly boring is our... I like that it had earnings and then it put in this big sell-off and then held. Right, so we have this kind of push down like this. Look at that bottoming tail. That really trapped people in after earnings. So I like Flowers. So we're going to call it what, like, I don't know, 28.50 and then 27.50. So we have the last things I put on is toothpaste. I think CAG is a frozen. They're like, was it someone who made frozen pizza as a joke? I think that's actually what they do. And now flowers.com. So, right, just if the market's going to tell us that boring is the way to go, then boring is the way to go. Yeah, it's kind of a wide flag, but could be. Keep an eye on that. I'd like to see it a little tighter. Genesis. So that's so basically anything with energy or pipeline or anything like that. Again, I'm ignoring, not because they don't look good. Like that GLNG looks really good. I am just full of energy, and like I've got a lot of what I call micro positions, where I bought something, I made money on the trade, and I sold all but like a tiny amount. So I probably have like 10 or 15 micro oil and gas and financial positions out there, where it's enough that it makes up like a large percentage of my portfolio, where I'm like, they were all great trades, they were all profitable trades, but it's like it's enough. I feel like I'm kind of pushing fate if I kind of go in there too much. It's one of those, if you're all loaded up in one sector, you're better to be just all loaded up kind of in one stock. So it's glass manufacturing. That's close. Yeah, and it's not so much that I think you need to be like perfectly diversified or anything like that. I don't really believe in that, but if it gets to the point where I'm like everything I'm seeing in relative strength is oil and gas, and I have a few on the list still. Like we added Slumber J on there, so I'm gonna keep adding the ones on the list that keep looking like they're gonna break out. But there's just got to be a point where you go, okay, I can't be all oil and gas. I can't be all this or all that, because if something happens in the world that dramatically affects oil and gas production overnight, then you're just, leaving yourself open to some pain. But it just looks so good. Like this VNOM, it's another great looking stock. Earnings are a little bit too close for me anyway, but it's crude oil and gas. WHD, another great looking stock, but oil and gas, right? So no, that's it. So that's all I'm going to add to the list, which is fine. We've got 13 symbols on there, which I think is enough. All right, guys. So I've got a cutoff at 5 my time, so I got 20 minutes. So I appreciate everyone for coming, hanging out. If you can leave a like on the way out, if you want to come by the website and check it out. Again, I do this work every night, and then I build a blog post for the pro members to read. So instead of having to listen to me, you can just read that and get all my thoughts. Speaking of, when I go from here, I'm going to just combine everything that we just did into that blog post, and I will have it up for the pro members. And as always, I'll ping you in the Discord chat, which we do have. It's not a Signal service. I just can't say that enough. But we do have a Discord chat where we kind of just hang out throughout the day and just, type back and forth of, what do you think of this stock, or isn't it interesting, this move, that kind of stuff. So if you're interested, come check it out. If you're interested in any of the products you saw, links in the description below. Both of those help out the channel. I appreciate it. I thank you all for coming, and I'll talk to you soon. Nice book in the background, Brian Shannon. Yep, it's signed. So what do you think of that? It's signed with a very nice message from him. So that would be kind of cool. But anyway, check you guys out later. Please leave a like on the way out.